good afternoon, Forex traders around the world. This is Mohammed Kande, co-founder of Forex Executives, coming at you with an extensive, deep look at New Zealand dollar, Canadian dollar. Really excited about this pair. I've been hearing in telegrams and on Instagram, a lot of people are excited and looking to short this pair this coming up week. So I wanted to share some insight on what I'm looking at in this market right here, and hopefully it could be of value to you guys. So first things first, when I'm breaking down the market, I always start from the monthly and I work my way all the way down to the 4 hour to find a good entry, but I want to have an idea of my direction. The best way to know your direction is on the monthly and on the weekly, so we always do that. So first things first, I'm going to start from the bottom right here, and I see that the market was in a uptrend, right? And then afterwards, the uptrend was ceased when the market became confined to two areas. This area right here, price is stuck now, right? Price has been stuck within these areas right here. So these are the two areas the price was stuck in. So we had a nice little uptrend, and then price has been stuck within these areas right here. My job when I'm performing technical analysis is to identify trend one, and then two, try to figure out where is the lowest point in the trend or the highest point in the trend where I can get into the market. So that way I can have better risk management, better risk to reward ratio, and I can get into the market comfortably, right? Because oftentimes traders lose trades because they get into the market at the absolute wrong time, and then they are in drawdown. And most people don't have the mental toughness to stick it through drawdown. So what happens is that when you're in drawdown, it gets to a point where you cannot handle anymore and you break and you close the trade. And then right after you close the trade, a day later or maybe 4 hours later, the trade begins to go into the direction that you had thought that the market was going in, and now you're pissed at yourself because you just almost blew your account for a trade that you knew you were right about simply because you got in at the wrong time. The market, Forex, has some of the best technical analyzers in the world. If you go on tradingview.com, you're going to see analysis produced by thousands of people. And 80% of the time, the analysis is correct. If that's the case, why is it that 90% of traders are successful and only 90% are unsuccessful and only 10% are successful? It's because of your entry into the market, when to get inside of the market. Everybody knows that the market, I know that the market is going up. Okay, I know that the market is ranging between these two areas. I know that the market is going up. Now I can go ahead as soon as 5 o'clock hits this afternoon, I can go ahead and just set my buy entry into the market right here, right? And the market is more than likely going to go up and tap this area before it shoots back down. But what's going to happen in between? The pullbacks. You see, what happens is traders buy at the high, and then the market pulls back and they get crushed. They buy at the low, the market pulls back and they get crushed. So getting into the market is extremely important. When you learn when to getting into the market, life becomes absolutely easy for you. So let's take a look at New Zealand dollar, Canadian dollar. We have consolidation between these two areas right here, right? The market is confined within these two areas. This is a range market. Top to bottom is what the price is doing. Price is going up and then going down and then going up again and then going down, right? But it's not that simple, right? Because you're seeing the way that the price moves. When the price comes to this area right here, it's important where you're going to get into the market, because you see, you can get taken out of your trade. You can get taken out of your trade. So as a swing trader, it's extremely important to get into the market in an area where even if the market wicks, you're not messed up. You see, when you get taken out by wicks, you're entering the market where everybody else is entering the market. You see, a good trader never gets taken out by wicks. That's why I always tell people, technical analysis trumps fundamental analysis when you know how to do it properly. Every once in a while, you may get messed up by the news, but it's going to happen very rarely when your technical analysis is on point. When your technical analysis is on point, you don't get taken out by wicks. If I got into the market at 98.14, I would have never been taken out by this wick, and I would have rolled price all the way back down to 83.14. And then same thing. If you catch it at 83.14, you'll never get messed up. You catch it at 83.14, even when the market wicks out, you don't get messed up. Look at the wicks. Wicks are designed to take new traders out of the market. Wicks are designed, to take money away from you. So learn to get into the market Perfect your entry. Work on your entry, and you'll be fine. All right, guys. So I'm looking for the market to push up. I'm looking for the market to come over here. But before that happens, other things have to happen as well. So let's go ahead and delete this right here, just so we can take a look at what's going on. Fantastic. So now let's take a look at this. The market began a small trend, small downtrend, right? Look at this. But the downtrend came to a halt, or it's coming to a halt because the month isn't over yet. The downtrend is coming to a halt because look at this big bullish engulfing that's forming on a monthly. Now, to get a better visual, let's go down to the weekly. But what I want you guys to keep your eyes on as well is this. You have a W pattern that's forming right here, or a W pattern that formed, and then the market began to go down, and then the market kind of came up a little bit. So the W pattern could also be that it was a head and shoulder pattern, because if you see the market came down, first shoulder, head, and then we have a second shoulder right here, right? So that could be what's going on as well. But I definitely want you guys to keep your eyes on a W pattern, because it's good to identify the patterns in the market. I know for myself, I trade W patterns, and usually after a W, I'm looking for a short. All right, so we know that we have that going on. So now let's bring price down to the weekly so that we can see what's going on. We have a nice resistance at 91.87 that was breached last week. Very, very strong area. If you guys look at it right here, the market is very, very strong in this area right here. Extremely strong in this area, right? Extremely strong in this area. All right, so the fact that this area has been breached now says a lot, because this is a very strong area, right? Very strong structural area. So every time market comes into this area right here, prices shot off. So the fact that the market has broke not only the trend line, but this area right here speaks volumes to me. It tells me that we may be changing gears. The market was in a downtrend, and then boom, we had a head and shoulder pattern that was created within that downtrend to let us know that the market will possibly be looking to change, take a different direction. So what that means is that I'm looking to ride this baby up back all the way over here, 96.07, or all the way to 98.14. So we'll see what happens, right? We'll see what happens. Let's mark off our head and shoulder so that way you guys can see it. Boom. So this is my head and shoulder pattern structure right here. Market broke above my resistance. I'm looking for market to come back and retest it as support now. Retest the risk, retest my support, or push into structure and retest my trend line. Either ways, I'm looking for the market to do some kind of a pullback. So I think that that's what a lot of traders are seeing, right? A lot of traders are seeing a pullback and thinking that, okay, you know what? Price is getting ready to short. Price is getting ready to short. And I'm not 100% accurate, right? Price may still short, but this is what I'm looking at. And my job as a detective is to gather as many clues as possible for what it is I think is going to happen. The more confluence I have, the better. So I have my daily trend line drawn up right here. Market broke above my daily trend line. So I'm looking for the market to retest my trend line. No retest, no entry. I'm looking for the market to come back down, push down, retest structure over here, retest my trend line, retest my support right before the market shoots back up. So a lot of people are looking at this move right here. This push down right here. A lot of traders are seeing this push, thinking that the market is going to start shorting. I'm looking for the market to push down, tap my trend line, and then I'm looking at the bigger picture, because I know the head and shoulder pattern. Trend lines are extremely important, and trend lines really, really work out. I mean, 99% of the time, if you draw up your trend line accurately, properly, you're going to get into the market on the right path. You know, a lot of people are seeing, you know, this double top right here and saying, okay, you're cool. Price is overextended. Price is coming up here. I don't think so. Let's take a look at the EMAs. Right? What does price pulling back to the trend line coincide with? Price pulling back to the trend line coincides with my 10 exponential moving average. So I'm looking for, and it's right around the structural area. So, you know, those are my blues clues. Those are my blues clues. And if you look at it, market have been ranging. Market created a short range within this second shoulder right here. Market created this nice little range right here. The range finally broke. when the range broke, market came back to retest it, right? Perfect retest, and then broke it. So we're looking for another one right here, and then we're looking to take it up. So that's what I'm looking at. So now let's push it down to the H4 and see where we're gonna get that amazing entry. So these are the possibilities right here. This is what I'm looking at. I'm looking for the market to push down 1 level, 2 level, or the 3rd level. 3rd level would be coinciding with a tap of my trend line. 9150 area is where I'm looking for the market to come back to, and then the market to take off. So this is what I'm looking at, fellas. This is how I break down the market. I hope that this helps you out. I hope that you see what I'm doing. As you guys can see, I don't have a crap load of indicators. Naked charts are all you need to be successful in this market. Simplicity is key. When you simplify your trading, you're going to see a lot more success. Simplicity is what defines the fantastic trader. That great trader, that person that you emulate, that person that you want to be like. Well, guess what? This is what they're doing. Naked chart price action. That's what you want. That's what's going to get you to the next level. That's the way to do it. All right, guys, that's all I have. Happy trading. I hope this helps out. Let's have a fantastic week. Massive pips only, okay? Oh, one last thing, guys, before I get out of here. Let me show you guys what would cause me not to go long on this trade anymore. Excuse me. If market breaches this trend line right here, I'm not looking to go long on this pair anymore. If market breaks below this trend line, retests it, and creates a lower low, I'm not this trade. Once this structure area right here has been breached, that trade is invalid to me now until I get another break above this area right here. You guys keep that in mind. So I'm looking for the market to come back and tap this trend line at some point, which is probably going to coincide with the structure area right here. Market taps my trend line, and I'm looking to ride the market back up. That's all I'm looking to do. That's all I'm looking to do. So let's take a look right here. This is a possibility, right? Boom. And then once the price comes over here, we're patient, right? While everybody's still in a sell position, we're going to ride it up. We wait for a signal right here, and then we take the market up. It's that simple. It's that freaking simple, ladies and gentlemen. I'm telling you. And this risk to reward ratio is absolutely amazing. Absolutely amazing. Right? We're going to get right below structure right here. So we're going to be risking 50 pips. We're going to be risking 50 pips. Right? Just riding it back to the top. Just riding it back to the top. Right? To the top of structure right here. Boom. Just riding price back up here. Do you see how amazing that is? Look at the risk to reward. Do you see the risk to reward? Right? It's 10 to 1. You're risking 50 pips to get 500. Simple, guys. Simple, simple, simple. And if price continues all the way up here, look at that. That's a 13 to 1. These are the type of trade setups that make up for all the losses you took this month. This is the trade that's gonna, if you're in drawdown this month, this is the trade that's gonna get you out of it for the rest of the month. These next 6 days right here, this trade is gonna get you a couple of 100 pips until before the end of the month. You can count on it. All right, guys, that's all I have. Happy trading. Let's get some massive pips. Hit the like button, hit the subscribe button. I'm coming up with a video or two every single week to help you traders better your skill set. Let's sharpen our tools every single day. We're students of the game. Let's keep learning. I learn even as a full-time trader now. I'm still learning. I'm still taking notes. I'm still diving into books. I'm still diving into videos because I want to learn. I want to learn. I want to better myself because I'm not going to stop until I'm one of the best traders in the world. And I hope that you feel the same way. Have a great weekend.